Hello everyone. In this video, we are going to examine what's the trade setup for tomorrow for Bank Nifty and Nifty. Let's start off with Nifty. Here are the fast levels which I keep posting on a daily basis on TradingView. You can follow me and get these levels added to your charts. So let's look at what happened with Nifty. Nifty has been in a very serious consolidation mode since there was a gap on Friday. It has been consolidating around this 100 points range, right? And we have seen this. Consolidation happening whenever the index enters into a zone. This orange is a zone which you have drawn from the past where it took multiple support and resistance around this levels from the past. So what can we expect having reached this particular level of around of 18,640? Can we expect the index to go further higher, or is it going to come back? That's a very critical question that most of the retailers must be having at this point in time. Since this US debt results are to be published on June 1st, and our market has also reached a new all-time high in the Bank Nifty index, we can expect the sentiments to be bullish and it can continue tomorrow as well. But there won't be a significant jump on Nifty per se, because all I am expecting is that at 18,700 there will be a strong resistance. And what levels you can expect the market to play between UT1 and LT1. These are the two levels in which I am expecting the index to consolidate tomorrow. And breaking UT1 levels, it can go up to UT3 in case if there is any massive rally happening on Bank Nifty, and then Bank Nifty supports, and then the global indexes are also like closing high tonight, then we can expect a massive rally towards UT3 levels, which is 18,867, right? But which is very unlikely. I am expecting the market to trade between LT1 and UT1. And it is also very logical for us to get into the CE side when it reaches LT1, because that's exactly where you have 200 EMAs and other support available, and you can quickly find a bounce back from this level. So what is this particular level? 18,568. So as soon as the market drops to 18,568 and 70 levels, around that level, you can comfortably get into the CE side if you want to play directional. And what can be the stop loss? The stop loss can be about 50 points you can keep, because there is a gap. It might try to fill that, and you don't want to really take a chance beyond that. So after it breaks 500 levels, we don't know whether the market would sustain and then come back, or it is going to go down. We are at a all-time high, and cannot take chance too much being directional, right? So if you're a writer, what you can do is comfortably you can go ahead and then write UT4 levels and LT4 levels, keeping UT3 and LT3 as stop loss. As soon as the market hits this particular zones, you can exit your trades. That could be a possible trade setup if you're a writer, right? And as a buyer, wait for opportunities. Two, three good opportunities are enough. Whenever the market, comes down to the 200 EMA levels, it's good. Just in case, let's assume that there is a huge gap up. Don't chase, just wait. Whenever in a 5 minutes time frame you find that the market is coming and touching the VWAP levels and EMA 20 and 9, that's one area where you can enter. So today also you can see how these levels have played out. It was traveling all through the CMAs, and then there was one breakout, and as soon as it comes here, it bounced back. As soon as it touches, it bounces back. So it has been playing around, and then when it broke these levels, you see exactly how this zone was giving a support, right? Like it just went out of the zone, then came in, and again it acted as resistance, and then it is closed. Right now, you see that it has closed above VWAP and 9 EMA and 20 EMA. So that's a good sign. There is enough momentum left in the Nifty index, provided there is also a good support from the global indexes and the sentiment is bullish. If the sentiment continues to be bullish in the global scenarios, then our market will also gradually go up. And I am expecting the immediate target to be around 17,800 could be the next levels of target for Nifty. So coming to Bank Nifty, Bank Nifty again has sustained very nicely. It gave this gap up opening on Friday, and then it sustained, and then it continued in this consolidated, and at last it made a lifetime high of 44,498, just 1.5 rupees short of 44,500. Right, it's a very good close. We have a close around 457. It's easy for the index to breach that and then rally towards 650 levels, and these are the next levels of target that I am anticipating. Here are the fast levels: UT7 at 45,088 and LT7 at 43,800. So if you're a writer, one of the things that you can try doing is wait for the first 15 minutes candle and see where the market is. If it is between UT2 and LT2, which is 44,272 and 44,636, if the market is trading within this range in the first 15 minutes, comfortably you can go ahead and write UT7 and LT7 strikes of probably next week, because the premium may not be there. So you can try next week strikes, and then as soon as it crosses UT4 levels, you can use that as a stop loss, or even LT5 and UT5 can be used as stop loss, depending upon how much risk that you are willing to take, basis which you can choose your stop losses. That would be a good idea for intraday writing. But if you're a buyer, then wait for the market to give proper uh, breakouts. Let me enable EMAs once to show you that we are trading along the EMAs, same as we saw in Bank Nifty. We are also seeing, sorry, Nifty. We are also seeing the same pattern in Bank Nifty, but the change here is it gave a very bullish close towards the end of the day. So the bullish sentiment continues in Bank Nifty. However, be cautious. We are at all-time high. Anything is a possibility. Here onwards, you can expect a sudden drop of 500 points, 1,000 points. That is a good possibility. Or the market continues to rally to 45K and then 46K. That is also a very good possibility. All depends on the US debt no ceiling results, which we can expect on 1st of June night, right? So what about tomorrow? Supposedly, if there is any sort of gap up opening, like say it opens between UT1 and UT2, don't initiate any sort of position. Wait patiently, let the market drop, and then come towards at least 20 EMA. This red line is a 20 EMA. At least let it come towards this, and then you can find one entry, and then VWAP can be a second entry, and then the best place to really average is this 200 and this red zone here. This is a perfect place, but that's too far away. Some of you might feel that it is going to cost me a lost opportunity. Then you can wait till at least 20 EMA and take positions here, and then keep trailing it. Um, so Another part is whenever the market makes a new high, let's say that it gives a flat opening and then it rallies towards UT2. You want to play directional, probably some ratio sort of straddles you can initiate. Probably taking one lot of call and two lots of put, something like that you can try, because that will be giving you a better returns. If the market drops from here and comes towards this 20 EMA, your two lots of P will give you good returns, and then the C will erode a bit, not a bit, quite significantly it will erode, but it will be, you will be gaining differentially on the put side because you have taken two lots, right? And I would recommend you to take at the money or in the money strikes. Do not play out of the money, as you know that day after tomorrow there is expiry. So you just got one day and you cannot be taking chance. If you want to play in the next week expiry, right? And other than that, if there is any sort of uh, if there is any sort of gap up opening, say that it opens around like UT2, UT3, don't do anything. Let the market take its direction. Let it give yourself some time, because in an uncharted territory, any moment a sudden fall can happen. To give you an example, see that the whole day it was consolidating, and look at this candle, and this one luckily turned green because there is a zone here. Otherwise, it was a large candle and then another large candle. So at new eyes, there are no predefined resistance levels. Resistance levels are being created as we play in the market at this point in time. So you cannot be blindly going with the sentiments OI data alone, because we don't have any history attached to it. So my sincere advice is, if it is giving us serious breakout, you can probably skip that day. And if you have been carrying any overnight positions, uh, and if it is in your favor, keep trailing it. If you haven't done anything, just wait, because now we know that this is one level in at which there was strong resistance. Like this is one level that was strongly resisted around 400 levels, and towards the end of the day it has breached. So this level will act as a support. 400 will act as a support, because today's data has given us that insight, right? Today the patterns have worked and then the breakout has happened. Now we know that 400 will act as support. Similarly, we don't know what would be the next levels of resistance. So in case if there is any significant gap up opening, do not chase it, just skip it. And more updates, you can join the live stream, and we can discuss ideas and strategies and then learn together, right? So that's it from my end, guys. Thanks a lot. All the very best for tomorrow. Bye.